This is one of my favorite strategies to trade the morning rush hour, as we can call it. I like to call it the morning liquidity run. I'm looking at the NASDAQ set on a 5-minute. I've also got a 1-minute time frame as well. So basically what I'm looking at is for price to take out previous highs or lows. Could be the overnight session highs or lows. Sometimes you might have to just think out of the box a little bit. But what I would like to see is price basically taking out a low and reversing to the upside. In this case, I'm saying a low because price has been trending its way to the upside. So potentially a better idea trying to go long on the NASDAQ here. Also have some help here from my volume delta histogram. There's been a lot of selling volume coming into this time window. As you can see on the volume histogram here, price then made its way back up, spiked up, but even though it did spike above this overnight session high, there was more sellers than buyers involved in that candle. All right. We also had a little bit of momentum divergence, this green line here, as price took out a higher low, which is typically what I want to see and what I call a morning liquidity run, followed by an immediate reversal, accompanied by quite a bit of, well, selling volume drying up, and now we got this beautiful, beautiful strong bar to the upside here, telling me that buyers are interested in pushing the NASDAQ higher. So if I just switch to a 1-minute time frame, it's been sort of up and down, right? So no real clear indications where I should get into this trade. But another thing I look for is for price to change market structure. So in this case, if price were to break this previous high, because this high occurred before this low, that could potentially mean that price is getting ready to move higher. Alternatively, if you want to be a bit more aggressive, price made a low obviously here. We won't know that this is definitely going to be a low until price takes out this high, but it made a high, a break down to the downside again, and now since it's broken the high again, I'm going to start assuming that this is potentially the start of a new trend to the upside, i.e. a break of market structure, in this case potential continuation of a very early trend taking shape. All right, so now from an entry perspective, and I've got volume on my side, also here on the 1-minute time frame, got momentum divergence. These are all things that I like to see. I would now need to see price pull back into what we call a fair value zone or fair value area. And if you look at a fair value area, we've got one right over here. All right, so this would potentially be a good place to get long on NASDAQ, either on the upper limit, or if I want to be really a bit more conservative, so somewhere in the middle here. But a lot of volume during these this time window, so price already pulled back a little bit to that. Let me see if I got the right area marked up here. Yeah, so you see this candle moving to the upside. Hopefully you can see that there's a gap between the high of that candle and the low of this candle to the downside, creating a fair value gap. I see price already touched that. I see we're getting a little bit of a pullback here. Let's see if I can get it. I'm going to place a buy limit order trading 2 contracts. And with fair value gaps, you could either go and place a stop below this low over here, the most recent swing low, or below the first candle that created the 3-bar pattern, in this case called a fair value gap. And this would be the first one. This one right over here. Alright, so let's see if I can get a pullback in there. From a risk reward perspective, I just want to preempt this so far. So I get in at 16,008. That's about 96 ticks per contract to that low here. That's a little bit too much risk for me, so I'm going to place it here at the low of this first candle that created that first value gap. Alright, and that gives me 51 ticks. Let's play with some even numbers here today. Call it 50 ticks. Alright. Now if I do get filled here, which I hope I do, that's where my stop's going to be, around about 15,995. I'll take my first target off at 50 ticks, so equal to my initial risk. And I see we do have this previous high over here, which is slightly higher than a 1 to 2 or 100 tick risk reward potential on that. Let me just see if there's any other highs. So no other highs during the overnight session, or actually for today, it's just thus far. So let's see if I can get into this. I'll be quite aggressive with this. If price were to pull back, fill me on this order and make its way back up. If price takes out a 1-to-1, I'm going to reduce the risk on the remaining contract, and I'm just going to see if I can get out here on a 1-to-2 risk reward ratio on the second contract. So if it all works out, it'll be 50 ticks on the first contract and 100 ticks on the second, 450 ticks total, which would be 150 times 5, because that's the average between the two, about $750 profit, which is not bad. Alternatively, I could get stopped out, right, for 2 contracts and 50. It would be 100 ticks times 5, $500. So this will give me a slightly more higher risk reward ratio than the actual loss if I were to take a full loss. But let's see. Price is making its way down. Hopefully this is not some sort of correction with a continuation to the downside, but I'm following the strategy. Fair value gap actually determines my trade entry location, and that's where I placed my buy limit order. And as I mentioned, I wanted to see momentum divergence. Price did take out a previous low, and we did start seeing a build up in momentum to the upside, not momentum, volume, as shown by the volume delta histogram on both the 1 minute and the 5 minutes. So all of the conditions are right for me to take a trade here. Right, so it is a few minutes later. Price actually broke this previous high, and now we're getting a pullback to that fair value gap. I'm still interested in this trade. Price is still within my time window that I want to be trading up in, and it's now made a new high. So I'm actually thinking that if we do get filled here, I'm going to leave that stop at 50 ticks and then still trade one contract off, since I'll be trading with 2 contracts or 1-to-1, and then potentially aim for this new high over here, which will give me a slightly better risk reward ratio. So that will actually give me 50 ticks on the first target, 150 ticks on the second. That's 200 ticks overall times 5. So what's that? 1,000. That would be $1,000 if I do not get stopped out. So let's see. All right, fast forward a few more minutes, and it does look like the Nasdaq is gonna go for this fair value gap here, right where my buy limit order rests at 16,008. Right, so it's been a bit of a wait here. Let's see how things go. Again, if I get filled here, got an ATM strategy, will automatically place 2 stop losses at the same level, a certain distance away from my entry, and 2 targets at different levels to the upside. I'll then position them manually at where I want them. Again, first target at a 1-to-1 risk reward ratio, and the second one I'll actually be aiming for this target over here, or this previous or most recent swing high. Let's see if I can get filled. All about patience, right? Cannot rush things here. Sticking to my guns with my strategy, not breaking any of the rules, and again, only looking for a very specific setup within this time zone between 9 AM and 11 AM Eastern Standard. Works on the Nasdaq, the US, and crude oil. If I do not get a setup, it's that price makes its way back up again, and I do not get filled here, then that's it for the day. I'm not going to force a trade, chase anything, and just retry again tomorrow. Alright, had a brief little move upwards, decline again. Hopefully this is it now. About $6 to fall towards my, there we go. See if I can get in this. That was awfully close to filling my order. Fingers crossed we get a full here. There we go, I'm in. Alright, so I'm going to place my stop loss right there. First target at that 50 tick T1, and my second target just above the peak of this previous high, swing high. Alright, like I mentioned now, trade management is very important. If price were to take out my first target or reach that, I'll reduce the risk on my first or remaining position. Sorry, that will be 25 ticks. Let's just figure out where that is at the moment. Which be right about there. So I'm just drawing these lines, and it's where price is currently trading. Just visual markets. Oof, this doesn't look good. Let's see what happens. Taking a bit of heat on this trade, but it is what it is, right? You've got to accept your risk prior to getting into any trade, for that matter. Avoid the common mistakes of moving your stop loss too wide. I'm leaving it where it is at. If I get stopped, I get stopped, and that's it. Again, price reaches my first target. If it does, I will reduce the risk on my remaining position to half. Then price can come down, stop me out, and at least still walk away with some profit. And then hopefully we get that nice little runner to the upside. There we go. First target off, and that's where my remaining position stop loss would be. And now let's see what happens. If this was the end of a little correction, then one would assume price will take out to get very close to taking out this previous high, or at least make a double top. I'm a little bit below that previous high, so this is a good place to position my second target. Let's see what happens. Alright, fast forward again a few more minutes later. Nasdaq continued back to the upside. It has not reached my second target just yet, but I got in quite low towards this pullback, if it was a pullback. So remember, I already reduced the risk on my remaining position after price hit my first target. I'm actually gonna just move my second position, or stop loss in the second position, to break even plus a few ticks in my favor. Maybe actually a rest below this little swing over here. Trying to not move my stop too tight or too close to where price action currently is, trying to avoid a premature stop out, right? Get stopped out and then see the market continue in your direction, which is something that happens quite a bit, right? I'm sure you've experienced that before. We're sitting nice and neat here on just over $400 on that second contract. Really hoping for a nice strong pump up to the upside again. Just under $600 on the second contract currently. It does look like price wants to take out this high, at least test it. Hopefully I don't have to endure a pullback now prior to price reaching this high. If it does reach that high, it does look like it's going to happen. I'm locking in a bit more. Price just reached the opening closing prices of those two candles. Sometimes that can act as resistance. Let's hope we get a nice bump up. And are we going to get out of here? It's so close. I'm just going to try my stop below that candle's low. And I'm out. A beautiful, beautiful trade. 150 ticks on the second contract, 50 ticks on the first, 200 ticks overall, times 5. $5 a tick on the Nasdaq. That's still $1,000 booked there, obviously minus commission. But a really nice trade overall. Yeah, so this is one of my favorite strategies that I trade on a daily basis, but only if I see very specific setups occur. If you liked what you've seen in this video and you want to learn a bit more about this strategy, then please go check out the link in the description and join our Ninjacators Fast Track program, where we then have different ambassadors, including myself, that throughout the week present some of our most favorite strategies, so you can actually join a learning environment as well as get your hands on these really cool indicators that in many cases help me a lot with my decision making. So go check out that link. Thank you very much for watching. I'll see you in the next one. Take care and